PowerPoint. Yeah.
Okay, we're going to be sure we get the right loudness so everybody can hear there on Zoom and everybody here hasn't been blasted out of the room. So hopefully that'll work. Okay, so thank you so much for coming for what you might view as a dry topic, but we're going to try to make it as interesting as possible. We're going to pass back and forth here, so hopefully you get a variety of voices and so forth. So what we're going to talk about is conservation strategies, and particularly emphasizing, as Angela said, when our landowners are thinking about selling or doing a conservation easement, a great thing in their minds and their hearts is conserving the property, but they're also thinking about, how is that going to be treated for their taxes, for their estate planning? And there's some real advantages of using these gift techniques for conservation. I always doing well by doing good. Keep that in mind. So these are the basic things we're going to talk about. Review of our agenda here. You pointed over there. Oh, maybe we put this. There you go. Okay. So introduction and importance, why do this? And then we're going to talk about these tools can both be used during your lifetime donations and also in contemplation of death. So we're going to talk about those kind of separately so you can get a good idea of how they'd be used at different times in different ways. And then I'm going to give you some specific examples of actual transactions that we have done and how the ability of the landowner to get personal benefits as well as gratification helped us get the deals done. Very bluntly. And I do have a little disclaimer at the bottom, even though Caitlin and I are both attorneys licensed to practice in the state of Washington. We are not providing our landowners with legal advice. We are aware of issues and opportunities, and we let the landowners know of those issues and opportunities and advise them to consult with their own tax advisors, their own lawyers to review these things in their personal situations. We don't ask them about their personal tax information or any of that. We don't get into that, but we know where to point them, if you will, to talk to their own advisors about this. Okay, so why does land conservation matter? I realize that we're talking to an audience here who already appreciates all of that, so real briefly. But obviously we want to preserve natural resources. We live in a wonderful, beautiful area with ecosystems of all kinds, right? From the riparian forest to the shrub steppe habitat, we seem to have something of everything. And the connectivity and the biodiversity of that is extremely important, and we want to try to preserve it for future generations. Every time I go up to Chelan and then come back and see the Wenatchee foothills, I just think, thank goodness we've been able to do what we've been able to do over the last 40 years. Another major motivation may be keeping land in the family. Many of us have treasured lands that we want to figure out a mechanism to keep them that way. And this planning can definitely help to do that. And people are very glad to know that they can reap financial benefits from conservation, so they don't have to sell for development in order to get those financial benefits. And also plenty of reasons, financial goals, as we said, that align with your philanthropy interests in doing things that benefit your community and will do so in perpetuity, as Angela said. And for professional advisors like lawyers and CPAs, these are mechanisms that they can use to help their clients have successful tax savings while doing their philanthropy. Caitlin and I gave this same presentation 2 weeks ago. I guess that was for the Estate Planning Council. So many of the attorneys and financial planners who work in our community were at that event. We had a really good attendance, actually. So it was very okay. Now I'm going to turn it over to Caitlin. She's going to talk about some of the strategies during life, and I'm going to get a drink of water.
Can I trade you? Just, oop. Next one. All right, so we're going to talk about some strategies to use while landowners are alive. The first one is charitable land donations. Those are just straight gifts of land. Sometimes landowners do not need compensation from their land transactions, and they can just make a straight gift to the land trust, and then they get the full fair market value deduction for their charitable deduction. We like to encourage landowners who are interested in donating easements or land to the land trust to contact the land trust ahead of time or while they're doing their estate planning documents to discuss the nature of the interest that they're donating, whether it's a right of first refusal, an easement, or a straight donation, and then to coordinate on the language that goes into those documents. When the land trust accepts a donation of land, it goes through the internal CDLT process of evaluating whether the land trust would accept that land into its portfolio. And we want to make sure that the intent of the landowner is honored in that gift, right? And so communicating with the land trust is really important into making sure that happens. Another great strategy, if you're over 70 and a half and you are charitably inclined, you should be gifting from your IRA. If you gift from your IRA instead of other assets like cash, you can, so you know, if you're taking your required minimum distributions from your IRA, those are all taxable at your ordinary income tax rate, right? So say your ordinary income tax rate is 24%, you're paying, you know, that amount on those distributions. But if you donate your RMD or a portion of it to a charity, that is not taxable at all. So you might as well do your donations through your IRA and not get taxed on that, and then retain your other assets that are not getting hit with that ordinary income tax. The CDLT and other charities also accept gifts of cash, stocks, and business interests. Again, if you're gifting non-traditional assets, it's best to talk with the charity about whether they would accept that gift and how it would be handled. You know, if it's understood that they would just sell it, liquidate it, and take the proceeds, that's fine, but it's always good to have that conversation ahead of time. And then the other strategy that we're going to talk a lot about is conservation easements. And these are legal agreements where the landowner agrees to restrict the land uses on the property, i.e. take away the development rights on the land, in exchange for, they can donate that easement, or we can pay compensation if we're able to get funding for those easements. If landowners go that route, especially if they gift a portion or all of the value of the easement, they are entitled to federal income tax benefits and property tax reductions. Okay, so why some landowners opt for conservation easements? We already talked about many families would like to keep the land in the family, but maybe they need to pull some money out, right? Conservation easements are great tools for that. Owners can continue to use their land as they are. We have many easements out in Douglas County where the landowners are still farming the land and using a portion of that for dry land wheat. And they get to keep that land in the family, but we were able to pay them for a conservation easement over those lands so that they won't be turned into housing developments in the next, 5 to 10 years as we see the development creeping up Badger Mountain. Owners still reserve the rights on the land. So even though they're giving up the development rights, they are retaining other rights. One example of that can be a building envelope. If they would like to pull out lots or areas that can be built later on, say for like if the kids or next generations may want to build later, but they don't have those plans now, we can set some of that land aside. With conservation easements, owners do not have to allow public access, right? And that can be appealing. It prevents fractional ownership. So if there's a conservation easement over the property, you cannot parcel out that property and sell off pieces. The underlying land has to stay in one large chunk. Obviously, a lot of the landowners who go this route have an amazing relationship with the land. Their families have been on it for generations, or they enjoy using it for recreation or hunting or other purposes. And we already talked about development. Okay, federal income tax benefits of a conservation easement. So these are actually, it's an extremely generous income tax deduction. So we'll talk about how easements are valued in a little bit, but once the easement is valued and the landowner can take the deduction, if they donate that easement value, they get to take that deduction for up to 16 years. They can use that deduction against their ordinary income and capital gains, which is kind of unique. It's limited to 50% of your annual AGI if you're not a farmer or rancher. But if you're a farmer or rancher, you can deduct your, 100% of your ordinary income in a year. And you can spread it out over 16 years. So really nice deduction. Just a note that this income tax deduction is governed by Internal Revenue Code Section 170, and you have to meet those requirements in order to qualify for the deduction. And that's something that you would work with your advisor to make sure that the language is correct in the easement to do so. All right, Washington property tax benefits. So when you put a conservation easement over property, that decreases the value of the land. Because you've taken the development rights off of the property, it can no longer be used for those purposes. So it results in a reduced assessed value of the property, which brings your property taxes down. And then also in Chelan-Douglas, Okanagan counties, we have what's called the public benefit rating system, which is the part of the Washington State Open Space Program. And that basically, you go through a point system and the county further reduces your property taxes based on the fact that you have a conservation easement. And, if you have public access, that further reduces your taxes. You get points based on, which rights you've given up, basically. So it can result in a very large tax savings property tax wise. All right, now Mickey's going to talk about how easements are valued.
Okay, so when we are working with the landowner about doing the conservation easement, we have discussions about whether it's going to be a full donation, a partial donation. We go through that process that Caitlin described, our internal process for matching the land up with our criteria and all of those things. So, but now I'm getting into the nitty gritty of how the value is determined. So first of all, it's done by independent appraisal, and that, depending on the purpose, it may be initiated by either the landowner or us. If we are getting a grant to pay for part of that, which we've done with salmon habitat, with a couple of the examples I'm going to show you later exactly, so you'll see that kind of in action, then we will retain the appraiser to do it because it's required by the grant that we do it that way. If it's a full 100% donation by the landowner, then the landowner will seek that evaluation. And as we said, it's really important that it meets all the IRS requirements for those Internal Revenue Code benefits that were discussed. So when the appraisal is done, the appraiser is going to actually appraise the property twice. They're first going to look at the land without a conservation easement on it, but with whatever restrictions are currently there. So you got a title report, and the title report will say, oh, there's a shared driveway on this property, or there's a power line easement that goes through it, or any of those ordinary things that properties generally have. And so the appraiser is going to consider what the zoning is, what would be potentially allowable, is the highest and best use on the property, et cetera. And they're going to come up with what we call the before value of the property. What is it worth as it sits there today? And when they do that, they're going to say, what is the highest and best use, and what would be a willing buyer and a willing seller under no duress to make the transaction, what would the price they'd agree upon? They use comparable sales and so forth to do that. So then those two values, the before value minus the after value, gives you basically the value of what you're giving up. And what you're giving up is what the easement says you can no longer do. You can no longer subdivide it into pieces. You can no longer sell it in individual pieces, separate pieces, because we want to keep it as one intact unit. You can still, and I'm going into this a little detail, but you can still convey it to others. You still own it. You still manage it, but you've given up these future development rights. And so that will be the value of the donation for the IRS purposes. And there is, of course, an IRS form that goes along with that for your ultimate taxes in the tax year of that transaction. That form is completed cooperatively by the land trust after we see the appraisal and are confident that it meets the basic requirements. We do not make any opinion as to whether the value is correct or not. That's the appraiser's decision for a gift. But we see whether it's facially, hits all the topics. And there are some special things about gift appraisals that, for example, if your home is next to the easement, but is not within the easement, they require that the appraisal consider that and say there's a benefit to your home because you have the conserved property next to it. So the appraiser has to take that into consideration too. And then there are things that we have to be sure that it is indeed a gift. So, there's sometimes requirements with a subdivision or something that says, well, a certain amount of property has to be set aside. Well, if it's required by government as set aside for a condition of approval of something, of a development, it's not a gift, right? It's a condition of something else. So in that case, you wouldn't be able to take advantage of these situations. But that's something that we would be aware of and discuss with you and say, we're going to have to figure out something else. As we said, it depends on the rights relinquished and the ones you reserve, and I go into a little detail on that. And even after you've made that gift, there's still a value in the land. You're keeping the land so that you can go out and recreate on it and maintain it yourself and so forth. So that has a residual value that remains in your estate, that remains for you to be able to sell it or give it away or whatever you want to do. We've had several conservation easements in which the landowner who did a conservation easement ultimately decided that they would give us that residual value. So first we had a conservation easement, now we completely own it. or they're planning to do that upon their death, that it'll become a fee vow, what we call fee interest owned property rather than a conservation easement. And please feel free to ask questions about any of this. Does anybody have any questions? Yes, Beth. Yeah. Yeah, that's a really good question. Yes, yeah. Yeah, so Beth, I asked the question of getting a gift appraisal. Do- What are the qualifications basically that are needed to do that? Um, so there are classes that the Appraisal Institute gives that specifically deal with conservation easements. And it's a really good idea for a person to have taken one of those classes because it is a little different than they usually do. The land trust we usually use general certified appraisers rather than residential appraisers because your residential appraisers are generally, they look at how many square feet in the house and bedrooms and bathrooms. And I mean, it's a good discipline, but that is their discipline rather than vacant land and so forth. Which is not to say they couldn't do it, but at least we use general appraisers just to be sure that the person who is appraised understands that, understands conservation easements, understands that it's a gift and it needs to meet the IRS requirements. And the landowner, the taxpayer is ultimately going to be responsible for whether that's right or not. Yeah. We can, relate people that landowners have used and that we've used who've done gift appraisals as well. Yeah.
So as perhaps an example of your third bullet down, if part of the property you own is a designated wetland, that's not a gift, right? Because no one can develop that anyway. Is that an example of land set aside for zoning and other requirements?
No.
Oh.
No. It would have to be a legally required set aside but no, it's an interesting example, but I don't think that one would be one that you'd be worried about.
Interesting.
Yeah.
Thank you.
Okay. All right. Moving on. So Caitlin hit on some of these. So we're going to show you, rights that are typically retained and rights that are typically given up, right? Just to kind of review those again. I'm going to get out my famous bundle of sticks here. So I like the bundle of sticks. So this is sort of how, baby lawyers learn the idea of sort of basic real property concepts. And I think it's helpful, at least to me, it has always been helpful, and I think other people, in understanding the conservation easement thing. And I'm going to have trouble holding on this one. But anyway, if you be in the before situation, your property ownership rights are the whole bundle of sticks of different rights, right? You have the right to exclude people from your property. You can invite guests, or you can say, I don't want anybody here. You can put up no trespassing signs. You can personally recreate on the property. You can sell it. You can build things on it consistent with the zoning code and so forth of wherever you live in the building codes. You can conduct a home occupation if the zoning allows that. You can cut down your trees. You can grow crops. All of those things are different sort of little aspects of ownership. Does that make sense? Yeah. And so we kind of take them we assume that they're there. We don't think about them until for some reason somebody says you can't do something. But let's go to the next slide. So with the conservation easement, you're effectively going to give up some of these sticks through the conservation easement. Let's say, you know, you have the ability to put up no trespassing signs. You can still do that when you have no public access in a conservation easement. So you retain that one. But you're going to give up that right to develop the build structures on the property. You're going to give up the one that says that you can cut it into pieces, make, you know, exempt lots or subdivision on your property. You give up that. You're going to get paid for that. You're going to get a donation value for that, but you're giving it up. So, for example, in the no development area, as Caitlin said, in circumstances, if you say, you know, I want to save a spot over here, we're going to ask you to define exactly where over here is, but I want to build a cabin there. Perhaps it's a dry cabin with no utilities, something like that. Or maybe a whole, like on one of these ranches, a whole potential home site for a child in the family or something like that. You're going to give up uses that we consider to be completely inconsistent with conservation, like mining or having a feedlot on one of these farming properties or a junkyard or something like that. So you're going to give up all of those kinds of rights. Generally, you give up commercial timber harvest. Easements generally provide for forest health kinds of work, for thinning potentially, even sometimes the term non-commercial thinning, certainly for firewood for use on your own property, but they're going to say no commercial timber harvest. And if it's really a timbered land, we may want a timber management plan for that. Sometimes we have particular purposes that are associated with grant funding, if we have grant funding. So if we're protecting sage grouse habitat on Badger Mountain, there's going to be a grazing plan that makes sure that the farming activity is consistent with the ground nesting bird, the nesting season. If it's for fish habitat, to be protecting the riparian vegetation along the stream. So you're not going to be mowing down or cutting the vegetation that provides shade to the stream. These vehicles, we're going to restrict those so that you're not going to say you're going to make a motocross track all the way through the property. You're going to be able to have access along existing roads or trails for maintenance on the property. All property needs maintenance, but it's going to be restricted to those uses. And some things that will say you can do this with land trust approval, and there's a process specified for how you request that approval. Say, hey, I want to do this, and we have timelines to review it and get back to you and so forth. And then, you know, sometimes people say, oh, gee, I didn't really want to do that. Can I make a change? Can I take some property out? Can I do amendment and take property out? No, is going to be the answer. This is in perpetuity, particularly if you've been paid for it or you have taken a tax deduction for it. We can't change it. Now, there are an occasional exception. Say you're going to you want to put more property into it. Yeah, we could probably do that. If you want to, sometimes we have contemplated a change, a reserved lot that said it can be moved from here to somewhere else through an amendment, then we can do that because we planned on it. Yes, Mike.
First of all, is that an annual payment? And second, is that payment set up for stewardship purposes?
Okay, the payment for a conservation easement is a one-time payment. Period. Basically, yeah. It's a one-time payment. As Caitlin said, the Internal Revenue Code will allow that payment to be spread over a number of years because of those adjusted income tax limits on charitable contributions. Sometimes you cannot use it all in one year, or you would just rather spread it over some years. So you can sort of make the tax impact, or the tax benefit rather, be spread out over years, but the payment's going to be made all at once. That's a good point. And you've also raised a very good point of the land trust is accepting a conservation easement. We are making a commitment forever, literally in perpetuity, to monitor that easement and to be sure that it's complied with. So our stewardship staff, Sam and his staff, will be making a visit at least once a year. Molly Jennings, who's with us in our program, and we'll be in touch with you as the landowner there every year to see how things are going. If you have questions, if you need help, if you need some suggestions on weed control or whatever, even though we don't do it, we're glad to try to point you to resources. But we're going to do that every year forever. And if there are problems, we're going to talk to you about them. We're going to have a conversation about it. And ultimately, we take the responsibility to enforce the easement. If some wrongdoer in the future says, forget about it, I'm going to go start excavating this up and build a house there, we're required to take action to resolve it. So we do ask the landowner, with donated easements and with donated fee land, to provide a stewardship contribution to be sure that we can afford to do that work. Thank you. All right, we're going to switch places again. Take my sticks.
Okay, so to wrap up the lifetime charitable giving tools, I just want to mention a few things. The Land Trust also has the Impact Fund at Community Foundation of North Central Washington, which Beth is the executive director of. Thank you for coming. And we have the Tina Skull Opportunity Fund that's also managed by CFN and CW. And the Impact Fund supports non-acquisition special projects, and the Tina Skull Fund closes funding gaps for land easement acquisitions. For example, sometimes landowners can't afford to make those stewardship contributions that we ask them to make, and the Tina Skull Fund we have used to fill those gaps in the past. So those are other donation options that benefit the Land Trust that are not land donations. I also wanted to mention some other tools. Donor advised funds. The Community Foundation also is the entity that manages those locally, but they are really neat tools that are charitable giving accounts that allows donors to contribute assets, usually a lump sum right at the beginning, and then the Community Foundation will invest those funds for the donor, and the donor retains the ability to recommend grants and scholarships from that fund moving forward, and leaves instructions with the Community Foundation to continue those grants after they're gone. Did I make anything to add there, Beth? Ooh, thank you. Will you hand her the microphone?
No scholarships out of donor advised funds. That's considered individual giving. But other than that, any other 501c3 public charity, whether it's in North Central Washington or nationally, is a qualified charitable grant out of a donor advised fund. And the other thing I would add is the Tina Skull Opportunity Fund is a very cool fund that was creatively set up by Elliot Skull to honor Tina. And not only does it close funding gaps, but it's also has the ability to be a revolving loan fund on behalf of the Land Trust. So oftentimes when you see a conservation opportunity come up, it can be imminent. Donors don't typically want to wait through a funding cycle of where conservation funds might come from. So it gives the land trust the flexibility to close a deal fast and then to wait for grant funding from state or federal or other philanthropic entities, or to be able to go out and raise the money through a campaign. So it's a really cool tool, and then it gets repaid back and it gets used again. So the Community Foundation has been super excited to get to set up funds similar to that give really another tool in the toolbox to our good partners like the Land Trust.
Thanks, Beth. That was an important clarification about the scholarships. Thank you for that, and additional information about the fund. I won't spend a lot of time on these last two items, the charitable remainder trust and charitable gift annuities, but these are tools that donors can use to donate to charities while receiving fixed income, whether it's a fixed payment or a percentage of the value payment. And then at the end of the term of the annuity or the trust, the remaining assets are donated to that charity. All right, next one. Tools for conservation at death. So these are the things you would do planning wise to set up your estate to benefit conservation when you die. You can use your will or your revocable trust to make these provisions. We've already talked about making full fee land donations, right? You can use your trust or your will to make those bequests. Again, talk to the land trust or entity you're working with about the correct language for those bequests. And then there, I always like to mention right to first refusal, just because, it doesn't have to be a full gift of the land. And if the land trust isn't sure whether they want to accept it or what their priorities will be in the future, you can always give them a right of first refusal to purchase the land either at a discounted cost or at fair market value. And another fun tool that a lot of people don't know about that I always like to mention is that we have this really fun law in Washington that allows people to make divisions at death through their will without complying with any subdivision or land division rules set by the county or the state or anybody. So if you have, for example, if you have a property that's 20 acres and your zoning says that it's 20 acre minimums for lots in that area, but you say, when I die, I want 10 acres to go to the land trust and 10 acres to go to my son or daughter. That happens, right? The county has to accept it, and you now have two 10-acre lots in a 20-acre minimum zoning. I know, yeah, it's really surprising, but you can get around all the rules, right? You don't have to build the sidewalks. You don't have to put the wells. You don't have to check for water availability. It's a wild exemption. Reminder that you can always make charities beneficiaries of your retirement accounts, investment accounts, life insurance policies. And of course, you get the step up in basis when you die, but all of those gifts will always be tax-free. And if you have an estate tax problem, right, in Washington, every individual gets $3 million of estate excise tax exemption. But if your estate, meaning everything you own, the fair market value of all your assets is worth over $3 million, then Washington State is going to want their cut of anything over that $3 million amount, right? And so if you're doing your planning to try and reduce the value of your taxable estate to around that $3 million mark, charitable donations are one way to do that, right? You don't have to give it now, but if you give it at your death, that amount will not be considered part of your taxable estate. This is the book about entities to manage lands into the future and for gifting. Nikki and I see this a lot, and I see it in the private practice as well. When I say, it can be family cabins or family agricultural lands, legacy lands where the parents say, I want to give it to my 4 kids, and they're going to figure it out how to manage it when I'm gone. And that never works. And so I really want to encourage folks that have these family lands and the intent is for family and descendants to use them or manage them going forward. Please set up that structure now for how it will be managed. Who's going to pay the property taxes? What happens if someone wants to sell? What happens if, someone can't afford to make repairs? All these questions need to be addressed in a trust agreement or operating agreement, something that's set up ahead of time. So please, please, please do that planning. And then we've talked about this already, but at death, you can also give some of these other non-traditional assets, cash, stock, cryptocurrency, business interests, etc. Any questions on those? No? Okay. We're going back to a conservation easements, just because these are the estate tax benefits when you die. So we talked about if you donate a conservation easement, you get to take those income tax deductions for the value of the conservation easement. And then when you die, you get to take another deduction from the value of your estate. So for up to 40% of the value of the land subject to the easement, or $500,000 maximum, will also be excluded from your taxable estate. So that's another great benefit. And obviously, going back to that, if you have a taxable estate problem, you've got over $3 million of assets. All that value that you've pulled out from the conservation easement and then the value from this additional death deduction will reduce your taxable estate. Okay. Case studies. I think you're back up, Mickey. So we're going to talk a little bit about how the land trust has, how some of these projects have played out in the past.
Yeah, so it's kind of nice when you can bring all that theory home, right? To see, well, okay, how did we make that work? Okay, so places you've probably been. This is our Castle Rock Ridge property. And you can see which way is north. So we're looking where the trailhead is on the far right at the bottom of Castle Rock Avenue, the end of Castle Rock Avenue, and then Forest Service public land up to the west. So there's a timeline with this, and I just like to share it because it's, like I say, how you get stuff done. So in the very early 2000s, even before I was around, some of our conservation landowners actually purchased this 398 acres, and they did it in 2 transactions from 2 different landowners. So that was, really takes some work to do that, and paid a total of $330,000 for it. This we call conservation by checkbook. In other words, there was something that was beautiful there and they really didn't want to see it developed, and we had the ability to buy it, and they did. At that point, with no future, somebody's going to buy it from me or anything like that. Just wanted to be sure it was protected. And it was interesting because even then the price was pretty reasonable because it has really quite limited access to an easement across another private property to the north. But they bought it, took to take care of it themselves and so forth. But early on when I was here, sort of issued a challenge to Land Trust. If you can find a piece of land that will enable public access to be provided to that property, we'll provide a trail easement so people can use it. And so after some effort, we were able to locate that property at the end of Castle Rock Avenue, which was purchased through the Foothills campaign in 2014. In conjunction with the city of Wenatchee. And I think most of you, the city of Wenatchee has been an incredible partner for this Foothills Trail system. The Land Trust could not have done that alone because the city is eligible for local parks grants that we are not eligible. And so we've been able to have them get a grant, and the Land Trust get either dollar donor funding or or another piece of land or something that we could provide a match for that grant. And that pattern has been done over again to produce this incredible network that we have across the foothills. So, like I said, we were able to provide that access. The landowner then donated a trail easement that basically went up to the Castle Rock iconic feature, which is pretty much at the far right in the eastern end of that property. And after many, many years of doing the stewardship by themselves, the landowner said, we're ready to sell it to you now. And so in 2022, and after a grant that we were eligible for, which was a critical habitat grant through Washington Wildlife and Recreation Program. So we got a 50% grant, and all of those grants are limited to 50%. And so then what the landowner did was they donated that other 50% interest. So the appraisal was done. In this case, there was an appraisal done by the land trust for the grant. And then the landowner used the same appraiser to do their gift appraisal. And the fair market value was then $700, which meant there was a $360,000 charitable gift by the landowner. So they had a financial gain on their $360,000 in cash. They had paid $330,000. But they also got a donation value for the additional $360,000. Does that make sense? Okay, so, and I mentioned this, the IRS form, because it's a very critical part of the whole thing. The appraiser who appraised that property would sign that form. The land trust signed the form acknowledging that we got the gift of half the interest of the property. And then the landowner submits that with their tax return. So that's one example. Another one is Cashmere Canyons. I know some of you are familiar with that. So this was a very complicated transaction. But again, in the early 2000s, the landowners of this property accumulated from a number of different sources. About 2,000 acres accessed off of Hay Canyon Road, off of Highway 2. And that Hay Canyon Road goes through Forest Service property. It's pretty, along the creek down there, it's pretty rough. And so, but the landowners early had the idea that they would like to provide public access on their property. And again, said to the land trust, hey, we're interested in working with you. But the access from Hay Canyon Road is just good. So if you can find a property that adjoins it that has good access, we'll work with you to provide that public access. So it wasn't something that was undertaken quickly, but in 2015-16, we said, okay, we'll see what we can do. And we were able to locate this property on the Han County that joins the other property and had actually been connected with it historically. So there was an existing road system that went from one property to the other, which was absolutely perfect. So land donated a good portion of the value of a conservation easement on the biggest piece, 2,000 acres, and we got a grant from the source for $500,000. So they got that in cash, and then they got a value of about $2 on that. And then we were able in 2018 to use that donated value as the match for a grant to get a conservation easement. About 345 acres, and to get me to build the trailhead. So a number of steps on that, but there was a plan and it worked. And that has resulted in a continuing relationship where the land trust helps manage the public access part of that. Now, I emphasize that this is a conservation easement in having public access, because people would rather have the public on their property, but in this case, the landowners, that was part of their vision to do that. So any questions about any of that? I'm sorry. Oh. Yeah. How does Molly ask a question? Oh, in the chat. Molly, put your question in the chat. How do we see it? We'll figure it out. Which actually brought us to our questions section anyway. So any other thoughts? Any question is fine, believe me. Yeah, Mark. What? That's okay.
Well, first of all, Chuck Clark, based transfer, and it makes me think we run into each other. Run into each other on trails in the foothills not uncommonly. And our burning, well, I should first mention Chuck Largent and I were on the very first board. We created the land trust. We've just outlived everybody else. Anyway, thanks, Chuck.
Yeah.
But
Thank you.
We have a burning issue. I have a burning issue with access. In Chelan County in particular, 83% of the land mass is in public hands, and yet there are many land areas and waterways that don't have access. I know that land trusts in the eastern United States, many places have just simple trail easements without conservation easements in particular. And I love, we all love conservation easements, but just trail easements and access, that's my burning issue and why I want to get the Trails Committee rocking and rolling again. Would you mention a little bit about just simple trail easements and their potentials?
Yes, and thank you for mentioning that, because we're very willing to do a trail easement. And the Castle Rock example that I gave before is we did have a trail easement there before we acquired the property, right? For 10 years or so. We'd entered into that agreement. It was renewable every 10 years, automatically renewable. So we're very welcome to do and interested in doing trail easements. And they can even be movable, so that you could have a trail easement that says, well, it's going to be here now, but it could be located in a different area. I'm thinking potentially of property that a landowner might be thinking of. That was another slide. Well, we'll come back to that. The landowner might be thinking, well, I think there'll be some future development or a couple of houses here, but this would be a great place to put a trail easement and maybe move it later. We would be willing to do that for sure. We can, so that is definitely an option, and it's one that we want landowners to know is an option. Yeah, and it can be compensated or uncompensated. It can be donated. An easement can be valued. A trail easement can be valued to make a gift. So, all those options are available for a trail easement, just like for a fee or conservation easement. We are past time. Okay. We are fine, but you are welcome. We're not going to be offended. And did you want to hit that last example you had up there? Okay.
Jen Ward asked the question about spreading the tax deduction over 16 years and if an owner dies, whether that's carried forward. That sort of gets into tax advice land, Jen, sorry. But I would say that that's a great question for an advisor. And then the next question is, what can you say to reassure a landowner who is concerned about liability that they may be exposed and if they donate a trail easement and someone is injured while hiking on said trail? So Washington State does have the recreational immunity statute, which is really great. It says that if a private landowner opens up their land to private access, that they are not liable for anything that happens, injury to people to the public coming onto that land. There are a few narrow exceptions for that, right? So if you allow public on your land, but then you put a mining pit in the middle of your property and someone falls in the mining pit, you're probably going to be held responsible for that, even though you can't create hazards for the public if you're opening your land to the public, but otherwise you should be protected.
Anybody, that it has to be free of charge. That's a basic criterion of it. So access free of charge, and it can be for boating, it can be for hiking, mountain biking, different uses.
Yep, that's a good point. Don't charge people to come on the property if you want that
Great.
immunity.
Okay, very cool. Thank you.
If you have that mining permit and you have that open pit mine and you put a fence around it and somebody comes in and crawls over that fence, you still have an issue. You've created a hazard. Nuisance.
Yeah, probably not advisable to let the public on your land if you have, that's right. You'd be in front of a judge arguing over these, facts about whether recreational immunity would cover that. Oh, sorry about our audio being spotty, everybody.
Question, is there a typical minimum parcel size? No, yes and no. I would say this. I would say for conservation, the smallest one we've taken sometimes was 20 acres. Depends on conservation values of the property size. Just keeping that the same work is required for a small one as for a big one. So if it's 2 acres or 2,000 acres, it's going to pretty much require the same work to get it done.
Yeah, and I would say that our riparian easements tend to be smaller than, our big sage grouse easements out in Badger Mountain. It just kind of depends on what the habitat is. I'm just going to go back to this one example quick if I can. Maybe. Here we go. Okay. So this is just a numbers illustration of what we've been talking about, the tax benefits of a conservation easement. So say you have a tax problem and you would like to reduce the value of your taxable estate. You have a piece of property that's worth $2 million. If you put a conservation easement on it, it's worth 1.3 million after the conservation easement, right? So your conservation easement was worth $700,000. If you donate that conservation easement to the land trust, you can spread that $700,000 donation over the 16 years, and then subject to that AGI limitation if you're not a farmer rancher. And then you get to apply for the reduction in property taxes under the Washington State Open Space Taxation Program, or the public benefit rating system. And so your property taxes are going to be reduced over the course of your life. And then when you die, you're going to get that $500,000 estate tax deduction. So you would get, it's over for, that's 500,000 would be the max in this scenario. And so at the end of the day, you took a $2 million asset and reduced it to an $800,000 asset for estate tax purposes at the time of your death. Plus, you got to put a conservation easement and ensure that that property stays in conservation forever. So, yeah, it's pretty great that you can, leave a legacy on the land and in your community and receive some great tax benefits at the same time. Yeah, if there are any more questions, thank you all very much for coming. Angela, do you have anything you want to say to wrap up? Or Mickey, do you have any final comments? Okay.
And you know where to find us if you have any questions, so feel free anytime. Yeah, we put some cards over here. Just feel free to grab them if you want. And they're at 18 North Wenatchee Avenue. Angela?
I was just going to say thank you to Mickey and Caitlin. That was fantastic. And thank you to you all for coming. And just a couple things coming up to let you know about. On February 24th, we will be having a volunteer appreciation event right back here at the museum. And I would invite you all to come. It really is a fun event, whether you're a volunteer or not. You can find out about all the many different kinds of ways you can get involved in the land trust. It's our opportunity to honor and thank everyone who's worked really hard with us, and we couldn't do without our volunteers. And then we also, of course, have a volunteer of the year, which is very exciting too. And then the next day, on the 25th of February, we'll be back here for the next Lunch and Learn. And we'll have Al Murphy, longtime volunteer, talking about fire-resistant native plants. So noon, February 25th, you'll get information next week about that. And anyway, thanks you all for coming. We'll see you next time.